All right. Well, hello, everyone, and welcome to the webinar today. Really appreciate you taking the time to join us. We are joined today by the esteemed founder and chair of First Mining Gold, Keith Neumeyer. Keith, thanks for joining us today to talk about Duparquet.
It's my pleasure, Dan. It's been a while since we've done this, so it's good to do it again.
Yeah, no, absolutely, and apologies to a few of you who were lined up on the previous one, but we're glad to have Keith now lined up here. Listen, I think we're just going to keep this as a pretty informal discussion as we go forward, and we'll line up questions. For those of you who have questions, be sure to submit them in the Q&A tab on the page here. And I think, Keith, maybe we just get into it. Obviously have a bunch of the shareholders and our followers and supporters here. Always love to hear about your view on the gold and silver markets and where we are. It's an interesting time right now, but why don't we start with that to set the stage?
Yeah, well, definitely. I just did an interview the other day on First Majestic, and similar question came up, because everyone, it's such a, I look at silver as probably the most annoying metal there is on the planet. I love silver, of course, but I love gold too. At least gold's got some stability that silver just can't seem to find. So it's great, being the chairman of a gold company, and everyone's waiting for the Powell pivot. The interest rates are going up, and the economy softening, and that's putting negative pressure on commodities, and of course silver and copper are looked at as commodities. I look at gold as a currency, but it is down from its highs, as we all know, but it's been pretty stable. It's holding levels, reasonable levels. You can't be too negative on gold. I think it's actually held up quite well over the last few months, with this rising interest rate environment. But the second the Fed pivots, which we don't know when that's going to be, it could be next quarter, it could be next year, who knows. But when it does happen, and we do know it's going to happen, this market is going to crash. The major stock markets are going to crash, and then the economy is crashing in front of our eyes. Yet the government obviously doesn't want to admit it. Changing the rules on what a recession is pretty hilarious.
Absolutely.
But anyways, like it's mining, miners, like Dan and myself, we're used to the cyclicality, and I sometimes investors aren't, because it does get annoying.
No, for sure. And it's tough to have your career and most of your net worth tied to something that is so cyclical, as we all know that you certainly are. Maybe just a reminder to the people here, how many shares of First Mining you own?
Oh, I'm in the just shy of 15 million shares.
Yeah, that's and largely purchased in the market, including some more having been purchased in the last, I think just after we were able to announce Duparquet.
Yeah, well, we were in blackout for a while, as you know, and I was hoping, and I wanted to take advantage of those prices, and I couldn't buy it, until we, put the necessary news out. But once we did, I went in immediately and bought, another 340,000 shares, and I had a couple of other bids in there, and I'll buy more, on weakness. It's tough to buy any junior mining stock, but we'll get into some details, as we get through this interview. But First Mining shares are kind of caught in this Lassonde curve, which really means that people should look at what that actually is, because it's quite interesting. Pierre Lassonde is a very, very well known mining entrepreneur based out of Quebec. He's built a number of companies, financed a number of companies, from the big royalty company is, Dan, what's it called? It's
Franco-Nevada.
Right, exactly.
Yeah,
Just had a bit of a mind fart there. But anyways, he's the founder of Franco-Nevada some 30 years ago. And anyway, so he created this chart, which was now called the Lassonde curve. And it's really, the permitting process. And Springpole has been caught in this permitting process, and there's really, it's been moving very well. We've made huge advances over the last couple of years, but there's still a couple more years ahead of us before we actually get the permits to break ground at Springpole, which we intend on doing. And now we've got this next asset, which is just super exciting, and that's after almost 6 years of negotiations.
Yeah, no, and that's I think that kind of takes us back a little bit, maybe just for a bit of a reminder for everyone. First Mining acquired Clifton Star. It was one of the last companies acquired, wasn't it? In the original stance, predated me by 3 years, I think, but or 2.5 years anyway. But it was 2016, and you and I were talking about this a couple of days ago. Interestingly, it had these project interests. It had the Duquesne project, and it had kind of 10% in Duparquet, but that wasn't actually the original impetus for the acquisition.
No, and you're right, and those are bonuses. And we didn't really know a lot about those assets, and we really bought Clifton for its cash. Of the original 10 companies that we identified to target, we ended up buying 6 of the 10, which was quite exciting, and built a portfolio of over 11 million ounces of gold spread over those assets. But 2 acquisitions, including this one, Clifton, I think there was about $14 million in the bank at the time we bought it. And then when we looked, and one of the directors who was on the board of Clifton, we brought him over to the board of First Mining, and then he educated us on really what Duparquet was. And within months of us buying Clifton, we started negotiations with the sisters that owned Duparquet, and I've met them a couple of times. But when Dan took over a couple of years ago, he started the process again, and he's been successful in getting them to the table and getting their signatures on a document. And I know people in the mining sector that have told me that it's quite a surprise that we're able to pull this off, because it is quite an exciting asset, and some of the players behind the scenes weren't exactly the most difficult, or weren't exactly the easiest to deal with.
Well, I think it was we talked about at the outset when we made the acquisition. It was complicated, right? And this was a complicated situation. The asset was held in a few different companies and different shareholders with different interests. But fundamentally, I think the biggest part of that was all, we had worked as partners and part owners of Beatty and Donchester and the surface rights for 6 years. And I think, in the end, it was a lot more about the existing owners of that business kind of entrusting us to move it forward. You got to remember, this asset was more or less held in their family from the 1950s. So, there was as important as anything in this was, I think, we take it really seriously as an opportunity, to have the trust and confidence of that group of shareholders to really help surface the value of this project, which is what they really wanted to see. And a part of that was, obviously having the backing of you and having the team that we put together, and particularly the team on the environment side, because, this is an asset that has a legacy with it as a past producing mine. And it was really the similarities between this and the Hard Rock project in Ontario that Steve Lines, our VP Environment and Community Relations, had worked on. And, most of the team that's now with us since 2020, they had very similar situations. And it was, I think, our ability to convince the shareholders to a degree that we were going to be good stewards of the project and really had a capability to do the work that needed to happen to move it forward.
Yeah, and these shareholders are very, tied to this town. They want to see this town, developed over the next, several years. And with this mine coming back into production over the next 5 years or so, or maybe 3 to 5 years, we'll see how long that takes. But it's going to be great for the community, and it's going to be a great legacy for them. And you're right.
Yeah,
you're right, Dan. For them to give us that opportunity and put their faith in us, that's a great thing for everyone.
Yeah, no, we're very thankful for that, and I think the plans are coming together. We'll talk a little bit about what the plans are as we move the project forward. But one of the things I think as we talk about the project, and for why don't I just kind of level set a little bit here for some of the people who didn't see the initial acquisition. The project is located between Rouyn-Noranda and Timmins, in the middle of the Abitibi Gold Belt, which is one of the most prolific gold districts in the world. Two past producing mines in the Beatty mine and the Donchester mine are the core of the Duparquet project, but First Mining already owns two other projects 15 kilometers to the east, one of which, Duquesne, is a past producing mine. So this is just such a prolific area. The Beatty mine was Quebec's largest gold mine in the 1930s. And it's produced until the 1950s and had a full metallurgical processing facility on site, including a roaster. And I think that's all, kind of contributes to a bit of what we see as the opportunity here, is that by finally kind of getting all of these things put together, it's a resource that is sitting today, when combined with our other resources in Quebec, is measured and indicated in excess of 3 million ounces, inferred of another 2 million ounces. So you're talking about, again, kind of like Springpole, a globally significant resource base here. But one of the things that's been kind of lost on this resource, and maybe I'll just kind of bring up a slide or two here just to help demonstrate this. One of the things I think that's been lost on this resource is, the fact that it's actually, when you look at it for the size of it, this is one of the largest, or one of the highest grade potential open pits in Canada. It's not very often you find 5 million ounce open pits with an M&I grade of 1.6 grams left in the world anywhere. I mean, I think it makes for a very exciting opportunity. This project is sitting today as puts us with another one of the top 20 gold projects in Canada. If we sort of triage this by projects that aren't in construction but are kind of advancing in the permitting stage, this is easily one of the top 10. And we think that there's a lot of opportunity to grow this resource beyond just what's there right now through some very exciting exploration opportunities that we see here in the near term. But it's
one thing, Dan, I'll just jump in. If you go back to that slide,
yeah,
I think it's not really fair, because that slide shows a lot. Not that one, the one with the bar slide.
Oh, that one, yeah.
No, not that one.
Oh, that one. There we go. Yeah.
This one here. Some of those assets, require much higher gold prices, because they're challenged by grade. In the case of Springpole and Duparquet, those are reasonable grades that, and are very profitable at current metal prices. Yet some of those other ones would not be.
Yeah, no, fair enough. That's a good point. We talked about that. There's a couple of ways I think that we can slice and dice that going forward. But, this is, again, I think it sets us up with another real cornerstone asset inside the company, and one that we are going to make a real focus of our work efforts going forward here. One of the things that when you look at again stacking this up for what we have acquired, and one of the reasons we're so excited about it, the amount of work that's been done on this project, 260,000 meters of drilling done between 2008 and 2014. We're basically buying this project for less than half of the replacement cost of the drilling that went into it, when you think of it from that perspective. And this is a project which, for the people who didn't follow Clifton Star in that 2008 to 2010, 2011 timeframe, this project was going to be the next Canadian Malartic, right? Which is currently the largest gold mine in Canada, and has gone on to a fantastic multi-year production run of 500,000 ounces plus a year. So, and very similar, Malartic was a few past producing mines. It was an old underground operation that they decided to look at, an open pit style, open pit opportunity to mine it. It was located right in the middle of a mining town, and a proud mining town that's gone on to demonstrate really, what the opportunities are in the redevelopment of these projects. So, no, I think it's between that, all the metallurgical work that have been done on it, it really is kind of a pretty unique opportunity that you don't ever really find in a tier 1 jurisdiction.
There's also 10,000 meters of drilling that was done that didn't make the cutoff, back in 2014. So, First Mining, maybe you want to just address that quickly, Dan, because I think, that's significant.
Oh, for sure. And that's, I think, for us, as part of our due diligence, we've been working on an updated resource, and something that we will expect to release here in the near future. A lot of that drilling was done prior to kind of the cutoff for their pre-feasibility study. And this project had a pre-feasibility study done on it that really only mined a small portion of the resource, interestingly. That the PFS was a 10,000 ton per day plant that mined through about 1.7 million ounces of the 4.5 on site. So it still left a lot on the table there as well. But the other interesting thing is, as we've done the diligence, and obviously we've talked about this, getting to understand this project, is there is a higher grade core to this project. And that's something that I think when we look at Duparquet, it can give us a different flexibility than Springpole does. Springpole has some higher grade areas in it for sure, but you kind of have to mine a certain amount before you get into the high grade at Springpole. At Duparquet, our first analysis shows there's a greater than 2 grams per ton open pit potential, with a much lower strip ratio there as a potential, call it a starter operation. So it's a lot of, I think, the next steps for us, getting to understand, how we're going to take the project forward, how we want to scope it, run some trade-off studies, and then coming after the initial resource, hopefully pretty quickly be able to define what the project is that we're going to take forward, both from a permitting perspective, but also from an economic study perspective. But Keith, I think interesting for the folks on the webinar here, you're CEO of First Majestic. You've acquired, I can't count how many projects you've acquired in your career, continuing even, in the last couple of years with some pretty major acquisitions. We keep telling the shareholders that, these are really strategically significant assets because there is a shortage of good projects. Like, talk a little bit about what it's like in First Majestic to try and find projects, and, how that kind of scarcity that you find.
Well, we spend, almost full time, scouring, public documents, looking at assets. We just had, and of course we get shareholders, showing us assets as well. We get banks showing us assets. So we don't have a shortage of assets to look at, but yet most of them just don't fit the criteria that I'm interested in. I learned a long time ago when I first put First Quantum together, and we had a similar kind of bull market back in the late 90s, and we were being shown all these very low grade copper assets, and we had a pretty decent core copper asset with reasonable grades, and we were just developing it, just getting it into production. And fortunately, we didn't get into this whole game of just buying assets that are marginable, can be profitable in high metal price environments, but as we touched on earlier in the discussion, the mining sector is extremely cyclical. So you have to, as a management team, you always have to look at assets that can withstand long-term trends. So we have to look 10, 20, 30 years out when we're looking at an acquisition to make sure that it can withstand lower metal prices, and it's hard to do. And I think shareholders really don't take that into consideration or really appreciate the efforts that management has to spend when we're looking at M&A. And in the case of First Majestic, I remember back in 2010, 2011, I had a lineup of banks at the front door showing us all kinds of stuff. And I want to get into details, but those assets even today are not in production, and likely they won't be in production, unless we see, as I predict, triple-digit silver. But you can't buy an asset that is that far out of the money just to add ounces to your portfolio, and at least that's not how I believe in building businesses. And I do believe in multi-asset companies, and putting First Mining together. That's what was my focus. We were successful in buying a number of single asset companies, creating First Mining, and I'm not a fan of single asset companies. That's why First Majestic is a multi-asset company, and First Quantum was a multi-asset company, and now First Mining Gold, of course, since its inception back in 2015, I built that to be a multi-asset company. So we're not reliant on one asset, and now with Duparquet, even makes it more exciting. But none of the acquisitions that we did, back in 2015, 2016, would not be economic at current metal prices, and they can sustain much lower. We used $1,200 gold when we were actually investing in these assets or developing the portfolio, and I don't think in our lifetimes we'll be seeing $1,200 gold.
No, I would agree with that, and I think the time frame is rapidly coming where we're going to see it shoot up, as we talked about before. Good. Well, I guess the one last question I'll ask, and then we can kind of dive into some of the questions on the line here. But what are the things that have you the most excited about Duparquet?
Well, jurisdiction is key to me. Being in Mexico and investing in Mexico for 19 years now. Mexico's not what it was years and years ago, and when we put First Mining together, we realized that not only were the assets in Canada quite a lot cheaper than, quite honestly, a lot of places around the world, and that's why we very much focus on Canada. But one of the key reasons why we focused on Canada was land tenure and holding costs, which are extremely reasonable. And permitting is not that bad. Sure, you've got to jump through a bunch of hoops, and there's environmental issues and local indigenous issues and community issues and all those types of things. But those are prevalent around the world, so that doesn't make Canada any different than anywhere else. But it does, from a land tenure perspective and a holding cost perspective and a permitting perspective, Canada is extremely competitive. And I think Quebec and Ontario are the two best mining jurisdictions on the planet. And having now our second core asset in Quebec, two 5 million ounce assets in one company. Dan and I were talking just the other day, and this portfolio should be valued at $2 billion. And I checked the market cap today before our interview because I don't look at it very much because it's just so darn frustrating to me. But I looked at it today. It's $170 million Canadian. That's Canadian market cap.
Yeah.
So it's like 140 something US, which is a complete joke. And that's why I bought a bunch of stock a few weeks ago, and I'll buy more. And one of these days, shareholders will wake up to the fact that this company is extremely undervalued, and maybe, who knows, a major might come in and throw some money at it, or we can't predict those types of things. But management, led by Dan, is doing exactly the right things. It's just tough, when you're going through the permitting process, and it just takes time and patience. But I would suggest to investors that they be patient, but also add to their positions, because I don't know of another company out there that has a portfolio like this company, and I'm super excited about it. But quite honestly, the stock sucks, which is really unfortunate, but it is what it is.
And for anyone who has any questions on the line here about whether or not Keith lets me know that he thinks the stock sucks every now and then, the answer is yes, he does. So anyway,
yes, I do remind Dan a lot about it. But,
yeah, no, it's not lost on any of us. Trust me. There's I think that's one of the things that we've really been trying to focus on is that fundamental value, right? And that's why we're moving Springpole forward. It's taking the risk out of these projects. It's advancing it in a market environment and an industry environment where companies don't want to do that work. I think we built a team that has a great capability to do it, and a team that I think with that capability can handle advancing more than one project. And particularly with Steve Lines in Quebec, and having that opportunity to leverage something that's a little bit closer to home for him as well. I think we're very well set up that in that time frame that you talked about, and I think it's in the next year or two, as you get closer to those permitting decisions at Springpole, we're defining another project at Duparquet, and kind of the broader Quebec portfolio. We see a few other moves in the rest of the portfolio, which I think gives us some real flexibility, financing flexibility going forward. I think investors, the market will have to start recognizing the value. As you say, this is 12.5 million ounces sitting in one company, and all those ounces in good projects being advanced in the best jurisdictions in the world.
Yeah, and what I think one thing we should talk about, Dan, is this whole rollback idea, or this whole rollback issue. I'm watching these questions or comments coming up on the screen here, and a few of them are referring that. And just so investors or shareholders know, I'm dead set against rollback. In my view, unsuccessful companies roll back and successful companies split. How many times have Microsoft split? How many millionaires has Microsoft made through splitting their shares? First Quantum Minerals, when copper took off back in, I think it was 2008, if I remember correctly, copper went from sub $1 to something like $4 or something in that range. And First Quantum being basically 100% copper, it went to $140 a share. And it had, at the time, less than 100 million shares outstanding. So, it was quite thinly traded stock, but the institutions had to own it because they needed exposure in copper. And First Quantum split themselves. I think it was 5-1. It could have been 10-1, but I forget. I have to go back and look. But anyways, they went up to something in the order of 500 million shares, in that range. I haven't looked at it recently. I don't know how much stock they've got outstanding today, but I'm sure it's much more than 500 million shares. B2 Gold, I think, has over 1 billion shares outstanding. I haven't looked at their quote lately, but I know they're probably north of $10 a share. So, at 700 million shares, yeah, sure, it's a lot of stock. But if you're an institution that wants to buy 5% of the company, you can do it, and then you're not going to affect the share price in any great way. And that's a great liquid vehicle for the big institutions who want to get into a company like First Mining. And I don't like thinly traded stocks. I don't like stocks that trade by appointment. And then a lot of these sub 100 million share companies are difficult to trade, and institutions will stay away from them because if they buy 1 million shares, they're going to move the stock. They sell 1 million shares, they're going to move the stock. So they're stuck into their investments, and it's just not a good place to be. So they just won't simply make an investment in the first place. So we as a company, we as a management team, just have to keep pushing along. And I see someone here just said Quantum was that's Paul Morris. Thanks, Paul. 5-1 split. So it was a 5-1. So and that's what successful companies do. And I would love to split First Mining now, but that's another discussion altogether.
There you go. We'll worry about that when we have a $10 billion market cap, and
exactly.
But as I recall, one of our shareholders a couple of years ago, just after you put out the PFS on Springpole, he called and asked, so what's the value of Springpole at $5,000 gold? Just keep everything else the same, just the value at $5,000 gold. And you start doing the math. It was $1 billion NPV at 1,600, and it's $150 million for every $100 on the gold price. So you then multiply, $150 million times, what's that in terms of how many hundreds on the gold price does it go up to get up to 5,000? That's 3,400. So call it, 34 times. You get into some pretty big numbers. And so exactly in that situation, there is every possibility that when you get these projects further toward development and de-risked, and you get some of that volatility that we talked about at the outset, when it goes in the direction that we all think it's going to go, we're not going to be talking about NPVs at $1,600 gold anymore, right? And that's the leverage that these assets give the investors. So, I think I appreciate you knocking the share consolidation question on its head. I often refer to your position in that when shareholders ask, which is very helpful and very clear. So we'll put that one behind us.
Yeah, it's just there has to be a reason for everything, but I just don't ever see a good reason for rolling back a stock. It just when I in my portfolio, when I see a management team put out an announcement that they're going to roll it back, I sell my stock instantly, because I don't know of a single occasion that, well, there are a few occasions. Yeah. I shouldn't say there are not any occasion, but in the most cases it doesn't work out well.
Yeah, no, fair enough.
Did you want to cover the Cameron question?
Well, here, I got a bunch of questions here on that we've kind of published. So why don't we start walking through these, and I'll go down the questions, and we'll both kind of chime in here. So Williams asked, is there any time frame for a PEA and for future drilling? Which is a very good question. In terms of the PEA, that's something really, as I kind of alluded to, it's something that we're starting to scope out now, because I think there's a few different ways that Duparquet can evolve. It is a huge resource, but it does have the flexibility potentially to look at a smaller, higher grade project that then can expand into a bigger, lower grade project. A bit like if any of you have followed Artemis Gold and the Blackwater project, it's a bit like what they've done, although I think we have an ability potentially to start with something that would be lower capital. So it's early stages. I think we need to sort of do some quick scoping work there, pick a path, and then drive on. It would be our goal that we'll have an economic study, be that a PEA or a PFS, because we need to remember that this is a project that has a pre-feasibility study done on it, and a lot of that work done to pre-feasibility level, including the metallurgy work, including the environmental baseline work. So I think from that perspective, we also just kind of need to look at, do we put out a PEA or a PFS? But all of that work we're going to come, I think, to a view on over the course of the next month or two, and drive on. So with all of the data that's here, the good news is a lot of that doesn't require much more drilling, doesn't require really much more metallurgical work or much more study. It's a bit of a desktop exercise, so it should be able to go reasonably quickly. We'll have a better sense of that, as I say, kind of in the next month or two after we pick the path we're going on. And in terms of future drilling, I mean, at some point over the course of the next month or two, it'd be good to have another session where we can talk about exploration more broadly in First Mining. But it is a really exciting exploration opportunity at Duparquet. This project sits in the Abitibi. There's an old saying around a lot of the mines in Timmins that, like, the real mine starts at 1,000 meters down. What's above that's nice, but the really good stuff is deep. And you just have to look at the depth of a bunch of the mines through the Abitibi to know that these are systems that have very, very deep roots. And so that, I think, presents a real opportunity, because there are significant exploration intercepts below the pit at Duparquet. There is certainly potential for underground resource there. And I think certainly potential to extend that at depth, extend it along strike. This is a project that, other than in that 2008 to 2014 timeframe, where almost all of that work was focused on infill drilling near pit resources or adding to near pit resources, there hasn't been a really comprehensive exploration view on the project, other than for a few years. So it's something, again, that James Maxwell and our team are rolling up their sleeves on and getting very excited about. But I think it'll take us a few months to define what we think that, where we can best put those drill holes and how big that program is going to be. On to the next question. David is asking, as seen from space, there is a large tailings area from the old mine that empties into Lac Duparquet. Seems to be no containment. Is this an environmental issue that we'll need to address? And if so, what are the projected costs? It's a good observation, David. Interestingly, those are it is actually, when you go on Google Earth, it says La Place Duparquet, which, in those of you who don't speak French, says the Duparquet beach. It is, those tailings have been there since the 1930s and 1940s. A part of those tailings sit on what will be the surface rights that we're acquiring. Part of them sit off of those surface rights and are actually already the responsibility of the Mines Ministry in Quebec, which I think there's been quite a bit of study done on them. Everyone believes that they will need to be cleaned up, but the interesting part about those tailings is that they have a lot of gold in them. So the PFS showed about 4 million tons of tailings grading, I want to say 0.9 grams, with a little bit of silver. And metallurgical work showed that the gold in the tailings can be recovered. So, I think it's one of the things, as we talk about sort of some of the similarities with the Hard Rock project and the development plan. The plan with Duparquet is, integrating the remediation of the historic legacy, environmental legacy of the past producing mines with the development of a new mine. And that's exactly what's happened at Hard Rock. Had great government buy-in, great support from the permitting authorities. And it was something that, Steve Lines and the team did a lot of work in framing and scoping. So we've had discussions with a number of ministries in Quebec, including the Ministry of the Environment. And I think everyone has a very pragmatic approach here, which is that really the best way to affect any of that longer term site remediation is through development. And that, I think, provides us with more of an opportunity than it does as a liability. So, but I think it's something we're well equipped to handle. It's going to take a period of study to kind of really establish a baseline. And that's really where we start on that program on the environment side, is study, establish a baseline, understand what the options are. How do we scope those options into a development plan, and then move forward with the permitting from that perspective? So yeah, no, it's a very good point, but I think that's, as those of you who've kind of followed the ESG report that we put out this year, and obviously, as a group that's advancing environmental assessment and permitting of big projects, we're in the business of ESG. And I think this is another one of those cases that really, showcases an opportunity where both your development plan and your environmental plan really align nicely. So we're excited about that. The next question that we have here from Mr. R is, Duparquet is exciting. Would you consider putting Springpole on the back burner and pushing ahead on Duparquet? Which is an interesting question. I think it's something that we certainly have discussed. I'll kind of give my answer to it, and Keith can give his answer to it, and hopefully they'll be pretty similar. I think with Springpole, we are in this EA process. I think we have very good momentum in going through this process, but we are at a point in the EA and almost in the feasibility study where there's a bit of work left to do. But the project's pretty well defined. We're getting comments back from other people, and it's kind of the draft EA is being reviewed by a bunch of other people. That gives us a real window here for the senior team to really push hard on Duparquet, because a lot of Springpole is kind of moving ahead on its own momentum now. Yeah, but I think, there's certainly opportunity for us to do both. And I think where we are with Spring Pole is a really important part where, as we move through this part of the development curve, working and very important working with the Indigenous communities in the area, and very important working with other local constituencies that, you do need, and environmental regulators and everyone, you do need some consistency in how you move it forward. But Keith, I don't know, what's your thought on that?
Well, I think shareholders don't really see what's going on behind the scenes. They shareholders see the stock price, and if they call the company, they might get some additional intelligence on what's actually going on. But what's happened over the last 3, 4, 5 years is there's been an enormous amount of advances in respect to Spring Pole, and also the government of Ontario is very well aware of this asset and is very supportive of this asset. There's still a number of hoops to go through, and we're still a couple years away for sure to get there. But there's a lot of eyeballs on this asset, and there's a lot of people that want to see this mine in production. It's going to create something in the order of 700 jobs in this region, which is extremely impoverished, very, very poor communities in desperate need of jobs. And this mine will do a world of good for this region of Northern Ontario. And I really want to see this built and running, because it's going to be great for the region and great for the province of Ontario.
Yeah, no, that's a great point. The 700 jobs is sort of direct at the mine jobs. When you look at the socioeconomic regional study that was done, it's like 3,400 jobs for a region. So that's roughly, employment for a town the size of kind of the employed population of Sioux Lookout, or Red Lake. Like it's a very significant. It'll be one of the biggest economic drivers of activity in this region in the Northwest for a generation. And I think that provides a ton of opportunity in working with the local communities, helping communities build capacity to be able to take advantage of the development, and make sure that we're bringing a real partnership approach to that, for sure. Another question.
During the process, you've done, I don't know how many meetings you've had with the Quebec government and discussions with the Quebec government before First Mining signed its agreement to purchase Duparquet. But the openness and the frankness of the discussions that took place, like, were quite refreshing. So we have two great assets in two great jurisdictions with two governments that are very active in the mining sector, who are wanting to develop mines. There's not too many parts of the world that are like that.
No, it's very true. We lose sight of it sometimes about, sometimes it takes a while to build, right? You have to build up those relationships, but we sometimes lose sight of that. We are in great places. Here's the next question, a question to Keith from John Lewis. Do you feel that the mining sector will finally wake up and move when we see this next move higher in the gold price?
It's funny because even today, the big players, are using $1,200-$1,300 gold for their economic evaluations of potential acquisitions, which to me is pretty surprising. When we're doing M&A at First Majestic, we don't use market, we put sensitivities in place so we could see, okay, what's an asset look like at $30 an ounce silver? What does an asset look like at $15 an ounce silver? And so on. And then we come up with some, guidance on, what that asset can stand. I think that, greed has definitely not stepped in. I think that, the Kinross acquisition recently of what's that company's
Great
called?
Bear.
Great Bear, kind of turned a lot of heads. I think it pissed off a few people because there was others looking at it as well. So I think, potentially it has got some of these boards of directors off their seats a little bit, and they're waking up to realize they may have to be a little bit more aggressive. We'll see. Time will tell. But at 1750 gold, 1760 gold, people are kind of relaxing, and I think that, if we do see gold break through 1850 and on its way to 2000 again, and with some of the activity going on with these majors, I think maybe some of these guys will decide to start being more aggressive. And in the case of First Mining, I'm surprised where it's at today. Who knows, what can happen over the next couple of years. But I can tell tell investors or shareholders that we're not going to give up easily. If someone wants to step in and have some fun with us, okay, go for it. We're a public company, but I'm not selling my stock too cheap.
Well, we
I want to build $3 billion companies. I built $2 billion companies as it is, so I'm not going to be happy if mining gold doesn't go to $1 billion.
There you go. That gives us the floor price for the auction, I guess. It's gotta satisfy Keith's $1 billion check mark.
That's right.
No, I think those of us who've been through a few cycles here and kind of seen how the M&A market changes over a cycle, this to me, Keith, feels a lot still like 2002, 2003, right? Like we haven't really seen a sustained push up in metals prices. It feels more like we're consolidating a floor than it does like we're on the way up. But it's when the trajectory changes that all of a sudden capital is available again, which is the other thing that this industry is still, sorely lacking, are new investors coming in. But you remember those days when the flows of funds were coming in and investors had to invest somewhere and they had to buy something, and there's a shortage of good companies and a shortage of good projects. And then that always manifests itself toward the end of the cycle in the real peak M&A activity. So, I think you look at kind of what the rough, and it's not any one particular stock. We can all point to a few that we knew and loved in the time, but you look at what basically the TSX Venture did from 2003 or 2004 to 2011. It went from like 500 to 3,500. Like when the basic tide goes up by 7x, then companies with good assets outperform that, right?
Well, it takes grade and jurisdiction, and we have both.
Yeah, no, that's great. That's great. On to the next question. Mike's asking, has there been any engagement with the Indigenous community regarding Duparquet mine development, and is support expressed? Mike, we have reached out. You got to remember, we don't quite own the asset yet, so that's coming next month. But we have reached out on the announcement just to, to make sure that the communities around Duparquet knew that it was something that was important to us to establish that initial contact. So we haven't had any direct contact. We're still a little ways away from talking about development at this point. But it certainly is something that we have reached out and look forward to making connections and learning more about the communities around and establishing that dialogue early, because it's very important. I think we've learned a lot of good lessons from that, working at Goldlund and working at Springpole and working at Cameron. Everywhere is a different cultural context. Everywhere there are, all the communities are unique. And so just getting to understand a couple of the communities around the Abitibi, we're looking forward to it. So we'll find the opportunities to make those connections. The next question here is from Ray, which is, what is the current status of the royalty package? Is a full spinoff into Anuco still in the cards? Listen, the royalty package, we're constantly getting calls on the royalty package because it's a great package of royalties. There are some, I think when you look at the package of royalties that we've kind of put together as we worked on the portfolio in the last couple of years, there's not many million-ounce resource projects in tier one jurisdictions that have had as much drilling as our royalty package has had on it in the last 2 years. I mean, in total, let's say, at this point, probably 150,000 meters of drilling between Pickle Crow, what's gone on at Goldlund, and some of the drilling that's going on at Hope Brook. So, no, I think we continue to look at what the options are for the royalty company. Certainly, one of those is do we float it off? I think you'd need to have a bit more critical mass than the royalty company has, the royalty portfolio has right now. And the other thing is the royalties are getting better every day because of the drilling, because of the resource expansion, and I think we're starting to see a bunch of those who are continuing to look for assets just like this. So we see that as still lots of opportunity kind of coming in the future. But Keith, the royalty the royalty portfolio to a degree was a little bit of what you foresaw when you set up First Mining back in 2015, 2016.
Yeah, and back then, before we decided to start developing these assets, the name of the company was First Mining Finance.
Yeah.
Because we didn't, I didn't anticipate, the success that we actually had. Even I was surprised with, when I was approaching these management teams or boards of directors of these companies we identified with, some of the best assets, gold assets in the world that we thought, they're actually quite interested in merging with First Mining because the fact they couldn't raise any money and they were about to shut their lights out. So it was very opportune on my part, and it was quite successful as well. That goes to the entire team. It wasn't just me; it was a whole group of people. But at the company, working long hours, late at night on weekends, getting these deals done. It was a hard task to pull it off, but it was. But then once we achieved it all, back in 2016, the market took off, as many people probably remember, and we decided, okay, well, we should act now that we have this portfolio, let's start actually developing it. And now, even today, 6 years later, we're actually looking at being a producer, and then that's really where we're trying to go. And whether we make it to be a producer or not, only time will tell. I would expect that some major will come and take us out before that happens. But if it doesn't, it doesn't, and we'll be a gold mining company, at some point, and that'll be exciting as well.
Absolutely, and that kind of dovetails into the next question that's on here. Benjamin's asking, how will development be financed given the low value of First Mining shares and the partnership assets? Constant dilution does not encourage shareholders to add to their holdings. And listen, we get this question all the time, understandably, and that's developing big mines and getting to that construction decision. That is, it's an important concern, and a concern I think that we all have about it. I would say that the big dilution events to come, i.e. building a mine, we got a few steps to go to before we get to that point. And when we get to that point, if our share price is still where it is, which it won't be, because once you get these projects to a point where they're defined with feasibility studies and you have permits to build them, those projects would typically trade at somewhere between 0.6 and 1 times their net asset value. At Springpole, that'd be $1 billion US. If we're not trading there, then I think, as Keith mentioned before, I think the M&A market will solve our problem if someone can find the value that will allow Keith to check his box on his overall value of First Mining. But no, I think we need to get it to that point, and the key question for us is, how do we stay well financed to get it to that point? There are a number of avenues that we have to stay well financed. The balance sheet is still in strong shape. We've got, at the end of the last quarter, 16 million in cash. We've got the royalty portfolio. We've got the the share portfolio that we have from the deals that we've done. We've got the partnership assets. And I think over a 2 or 3 year time frame, we just need to make the decisions about those projects, and ultimately, probably need to monetize a few of those, because I've said to a lot of people, we would rather probably sell those assets at the right value than sell our shares. But we've got this package of future payments and royalties and project interest that's worth, 60 or 70 million dollars. And I mean, that's what it's valued at today. I think it's worth multiples of that, because I think you do have some really good projects in there that are continuing to be advanced. But no, I think, we need to continue to stay diligent. And, one of the other things that we've talked about in the past is, the potential ultimately to maybe bring in a strategic investor or a strategic partner, be that at that construction time frame or, beforehand as you kind of approach some of those milestones. So yeah, listen, the thing I want to leave you with is I don't think there's any two people in the world more than Keith and I who are concerned about dilution for the company, right? We are both big shareholders. Me, not quite as big as Keith, but I'm, through 5 million shares, all of which have been purchased. And, we're aligned with the shareholders on this point for sure. Anything you'd want to add to that, Keith?
Yeah, I think there's a misunderstanding of what dilution is actually. Issuing shares is not necessarily dilution. It's whether the transaction is accretive or not. If you raise $5 million and you blow it, and you create nothing for it, that's dilution. If you raise $5 million and you add 1 million ounces of reserves or resources, that's, whatever that works out to, $5 a share or $5 an ounce or whatever, that's not dilutive. That's accretive. That's money well spent. And sure, there's shares being issued, but that's not dilutive in any way. Buying Duparquet for 45 million shares or something, we're paying for that.
Yeah, it's about 80 million shares, but it's call it $5 a share of value.
In tranches or whatever.
In total.
So, right. So, you're buying, ounces in the ground for $5 an ounce. That's your discovery cost. That's even less than your discovery costs. So that's a pretty darn accretive transaction. Yeah, sure, there's more stock outstanding, but it's totally irrelevant. So I think, people get wound up about, how many, what we're doing with our share capital and how we're spending shareholders' money or how we're, issuing stock. And we always have to ask ourselves, is it accretive? And we measure ourselves on a continuous basis on that topic. So I can assure shareholders that we spend a lot of time on this topic.
Yeah, no, for sure. And when you look at Duparquet net of the share issuance, you're talking about 30% accretion to the ounces of gold underpinning the value of your shares, right? Like, there aren't many acquisitions that one does in one's career that gets you 30% accretive. As someone who spent 20 years as a corporate finance advisor and 5 years as a private equity fund manager, they are hard to find. So no, we're excited about that one. I'm just conscious we're kind of down to about 1 minute left. So I think maybe we'll just take the opportunity, first of all, to say thank you to Keith for joining us, and thank you to all of the shareholders and our engaged shareholder base who are here with us today. But Keith, anything you want to say in parting words for the team here?
Well, thanks, Dan, for organizing this, and thanks to the Six Group for hosting this seminar. And it's great to do this again. It's been quite some time, and hopefully it's useful for the shareholders and investors. And feel free to contact the company at any time if you have additional questions, and maybe we'll do this again in another 6 months or so.
Absolutely, that sounds great. And thanks everyone, and thanks again, Keith. And at this point, we'll sign off. Thanks very much.